The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 13th day of February. My pleasure to be here. Dow's down 97 at 24,505. S&P's down 5 at 2650. The comp index is down almost 3 at, what is this, 89.78. Is that an 8? Good grief, no. Let me just do that one again. Comp. Guess in red it's a little difficult to see. It's a 6 surely. Yeah, 6978. I should have remembered that. I was just looking at it a short while ago. We've got the IWM Russell 2000 down 56 cents at 147.60. You've got the QQQ Nasdaq Index 100 down just 2 cents at 158.86, holding pretty well. I'll discuss all of these in a moment. Let's just go to gold, because gold is up about $5 or $6, up $4 now at 1330. Nice little reaction. There's a trend line. You see this daily chart here. You see this dashed line resistance. It held that resistance back on from the high that was made at 1370.50 on the continuous contract on the 25th of January. That declining line, I'd say it's about 45 degrees, came down, and 1349 was the resistance, actually even before, 1353 on the 2nd of February, 1349 on the 6th of February, and today it stopped dead right at the 1335 and a half resistance. How on earth do these charts know about these trend lines? It's really quite important to understand that this is the psychology of the market, and that what we're really dealing with are the give and take. If you've ever watched the ocean waves, you know that there are periods where there's a certain swell and then a decline and then a swell. Within that, you get your waves that go over that. So there's a base that's formed, and within that, you can get your rogue waves or anything like that. So there are all these underpinnings. And it's just think of the emotion of you're in a down phase. And within that down phase, you have a little bit of an up move. And you have a little bit of a down move. It's like an emotion, a little up emotion, a little down emotion, maybe a little deeper down emotion, and then back to the up emotion. And all the time, that emotion is in a trend. And that's really what we're looking at here. And it's very hard to gauge in mathematical terms, but I suspect if we were able to gauge this, I believe we're actually looking at it in emotional terms. So gold is in a down phase, trying its best to have a nice sunny side up look, but it can't break this barrier until gold really closes above 1335. It's not much further, about 5-6 points higher. I'd have to put it into the downtrend still remains in place. But this is going to be interesting. Look, silver is having slightly different. Let me just put this down so as you can see it. Look, draw this line. Silver is having a slightly different weekly chart in that it's not nearly as strong. Yet the daily chart, let me just move this away for now. Yet the daily chart is doing the same as gold. It's in a down channel, keeps trying to go up to the resistance line, and it fails. Couldn't even break above the 9-period moving average at about 16.60. So now what we're looking at 1653, silver needs, the continuous contract needs to break above 16.78. Can I still short silver is the question in the den. You know, I think the best move has been done. Now it's in a trading band. I'll talk about a trading band just in a moment. Let me just show you something else. The dollar pulls back quite sharply. Not a big deal, but it's a pretty ugly candle considering it's down 51 cents at 89.64. It has not been able to break into the 90.75, 90.25 area that I've been talking about. It's kind of stalled. I think that we need the full week to see what's going to happen with both the gold and the dollar, since they do trend in opposites, like a mirror, not like a mirror in percentage terms, just in trend. Now, if you look at this, is going to be very interesting. EUR/USD. Look at this. Euro-dollar currency pair rallying quite nicely. It's at 1.236 over the 9-period moving average. The peak C1, C2 failure pattern that we were looking at way back in the 125, 25 and a half area, we're at 1.23. And if the euro can break above 1.242, that'll be very good action. And that weekly chart is improving, which says to me the yen, USD JPY, is in real trouble because it's starting to pull back. Whoa, it broke down. It's trading at 107.608. It is about to test, if it hasn't already, the low of the week of September the 8th, 107.312. 107.402, just about to hit it. The monthly chart uptrend dashed line has been broken, but this is just the middle of the month. Whew. We're going to see what's happening, and that's very ugly. So this is very interesting. High-grade copper. Where did it go? High-grade copper. Put that over there. High-grade copper had a very, very strong move. Pulling back a little bit, is up 3.14 is up at 314. Up 0.06, nice candle, nice improvement in the weekly candle because it's held this trend line very well, but the week it's not even halfway. It's only 2 days into the week. So let's see what happens, because you need to see that 3.1 support holds, but this is very nice action in copper. Now, if we're looking at USJ, yeah, I did that already. Next question, TLT. Look at this. The bonds just can't get any traction to the upside. Yep, it's made a little gray leg A, maybe a peak A at 118.47, up a penny right now. 117.85 is the low 2 days ago. Struggling to hold the very long-term uptrend support in the TLT monthly chart. Wow, this is going to be such an important month for bonds. Now, this is going to be very interesting. Look. The weekly chart has gone to a leg C. Even this week, it's gone to an extra high in the 30-year. But no, the 10-year has made a potential peak D with no new high so far this week. Hey, 1.5 days. But if it goes above 28.84, it's trading at 28.46 right now. If it does that, it breaks the trend line, it does a bunch of things, and it extends leg D. But this is definitely a peak C in the weekly chart of the 5-year if there's no new high above, not just last week, but the week before, above 26.21, and it's trading right now at 25.52. I think yields are in for a bit of a pullback right here. That's the way I'm looking at it. And then later on, we go to higher highs in the weekly chart. Let's have a glance at Wood. Yep, Wood's having an inside bar this week, up 24 cents as the iShares Global Timber and Forestry ETF. And the home builders also trying to have an inside week after a real big pullback from 369s to the low of 320. What was that? 313. 313, that is a 56. Whew. That's a big move down. I'll be right back. Basil Chapman, Dow's down 69. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So, folks, if you're looking at the 2-minute E-mini chart, rectangle patterns can last a lot longer than your patience. We've been in this range of about 26, I'd say 26, 53, 54 in the E-mini, and 26.42 for a long time. Almost made it through there in a peak D. But this is where you got to be a little careful, because every time you get to the boundary of the rectangle formation, you think it's going to break down. Instead, it doesn't. It breaks out up. Instead, it breaks down and it pulls back into the lower part. And this 200-period moving average, the blue line, is really acting beautifully as a support level. So just keep that in mind. Rectangle formations can last a lot longer than your patience. In the 5 minutes and 10 minutes, we're waiting for a peak D above the high that was made. I think it's going to sneak above there. So I was asked, could I just give a review of what I'm looking at, maybe for subscribers or whatever. Yeah, it is 2653 to start leg D in the 5 and 10 minute chart. So this is what I'm looking at here. Look. We made a Chapman Wave 5 to the downside in the 120-minute Dow chart. We went to a huge leg, 23,360 to the 20. Ooh, did I forget to type that in? 24,765. Let me just put that in here. 24,765. High yesterday. I mean, certainly 1,300 points is nothing to sneeze at. In a very quick space of time. So what we're really looking at now is that we've had the leg 2 to the downside. We're walking the 9-period exponential moving average support. Don't want to see this break below 24,400. That's going to be quite negative. Somewhat negative, but definitely if you break below 24,300 in the next 2 days, that's not going to be good at all. But I'm suspecting we will make a leg 3. You see this dash Chapman Wave inside green. Can you see it? Yep, you can see it. It's a little faint, but that is another technique that I've developed over the years. And this is the left side, right side price time match. And that says that we should go by 4 o'clock on the 15th. That's in 2 days' time. Try to get close to the 25. Is that 25? Well, the 9-period, this moving average right here. Why am I forgetting right here? This moving average, the 200-period moving average, is at 25,008. So 25,000 would be the upside target, but that corresponds to the dashed line, green line resistance. And here's your little containment area, upside, and there are two fighting patterns. I kept this high because I wanted to show that it was the arch potential M formation that we're looking at. But actually, this is really what I should have done. I should have said, you know what, this is a major pullback that we've had, first ones in a year and a half, and at the same time, some of the aspects are really struggling. For instance, we still have our short home builder, still short in the semiconductor index, looking favorably at a couple of infrastructure areas. Added a, let's see, call it a commodity this morning, very low price, just want to have it because it's acted quite well. So very selective, and we are along the Dow from early yesterday morning. So what we're looking at is a potential for a rally. And then I think what we need to be looking at is the chance to change places, that the rally is going to filter, how can I put it? The rally will fade, and then we've got to be suspect to see, is there an arch formation that takes the Dow down towards the lows of 23,300s, or is this going to be a longer lasting up move, still struggling to get to all-time highs? And the reason being, if you look at the, here we go, if you look at the Dow, this monthly chart, that is serious stuff. You already have to see a move back into way above 2,500, which is the 25,000, the 9-period moving average. You need to see a move into this candle, the very first weekly candle that started the big move down, and that has a low of 25,490. I'm not sure what's going to do it. Most of the stocks that I'm looking at are suggesting they need a bit of a breather. So yes, counter trend rally. Sometimes it's not a good thing to play a counter trend. Get the larger trend. I just had no choice. I felt strongly that I wanted to, that there was enough on the upside. Hey, I could be wrong. We'll see. So I think I've covered that. Couple of things that we need to do here. I was asked about the XLF. Yep, the XLF is trading quite nice. It was trading quite well. Yes, it's still doing okay, up 5 cents at 28.11. But really, this is just a bounce. It needs decisively to get into the 2870s, and it's a 28.11 S&P Select Financial Spider Fund. Here again, I think an arch formation is what we're looking at. Certainly in the weekly chart, KRE is the regional banks trading at this is 60.61, up 8 cents, same as the XLF. It's a little bit better looking chart in some ways, and it's the regionals, and I suspect that when the money starts to filter in from the tax savings, the regionals are actually going to see a pretty good reaction, which means that they should have good support. That's the way I'm looking at it, but it could be wrong, but that's how I'm dealing with this. Next thing I was asked about, what about Boeing? Boeing is the super tanker here. Look at this. Trading at 343.84, up 4 cents. It's held very well. It's made a peak E-top. This is definitely a sell signal. I haven't yet been able to decide whether until it goes below 318, closes below 318, I'm prepared to just still call it a sell signal rather than a sell mode, although everything about it says deserves a sell mode for now, at least in the daily. Weekly chart still holding very well. There's a monster. And for the general market to really pull back sharply, my suspicion is we have to wait for certain stocks to give us the clue. Boeing is one of them. Looking out, Marriott is possibly another one. Still holding very well after the sell mode. This isn't a sell mode in the daily from the 149.21 top on January the 30th. Weekly chart, yeah, G/C holding quite well. I really have to wait until Friday before I can assess. And this is also telling us a little bit about the economy, same as that high-grade copper was. All right, so that was that question. And if you're looking at, look, PPH. Oh, why am I talking about PPH? That's pharmaceuticals. Not looking very good. PPA is the aerospace. That's what I wanted. Aerospace. And defense. Why is it not notated? Did it? Oh, PPS. There's no such thing. Oh, there was. PPH. There it is. Peak D, weekly, sell mode. Monthly, it's in a retracement from the major high back in around 75 in 2015. Plunges, I can't remember now, was that an aberrational spike down to the 46s? I think so. But mostly it's gone to a peak C, great peak C. Yep, great peak C in the monthly, way below the 70. What exactly was that? Was that a round number? Was it 74.19? Yes, 74.97, July of 2015. Trading at 57 right now. PPH. Oh, it's the pharmaceuticals. I thought I was going to the PPA. I'll be back. Basil Chapman, Dow's down 112.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, we're back. Basil Chapman, Tiger didn't listen this hour. Dow's down 112, S&P's down only 7. So there's a little divergence there, or questions that I get. Oh, a bunch of questions. So we'll get to the questions right now. Let me just show you. Look, remember, in the 2-minute chart, I said bouncing around, the rectangle formation can last a lot longer than your patience. Look how we pull back. Now we're under the 9-period moving average, just above the 200-period moving average. Just keep your eye on that. Breakout above 2655, very good. Break down below 2644, not good at all. So that's a day of consolidation, very important, needed that. I was saying to subscribers, so for my newsletter, let me just show you here. So this is, I show many charts every single day. This is one of the many charts. This is the Dow 120-minute chart. I drew the patterns that we're looking at, the fighting pattern, the arch, and the uptrend line. I showed in same time frame, two views of it. This is with no MACD and stochastic. This is with MACD and stochastic. This shows that the uptrend so far is still intact. There's a 9-period moving average support at 24,420s. Very important to hold. I show the, I said between 12, usually I have other time frames, but today I said between 12, 20, let me just show you the daily chart. I think I can see it a little clearer. So is this the daily? That's the daily. So in this one, I said on the 13th, said, let's see, today, if early weakness cannot get back to at least a -40s to -20s by 12:20 to 1:05 p.m. Eastern time, that's the time frame we're in now. Now we're down 134. A weak close is likely. By Wednesday, the 24,650 to 720 should be achieved to continue this rebound phase. Actually, I said in the my other one, I said by Wednesday to Thursday. I figured if there was a down day, you can give it another day. This so far is telling me an incredible amount of information that I wanted to garner from the follow-through day. You needed two very strong follow-through up days. To be able to say you've gone from a buy signal to even a potential buy mode. This hasn't yet even confirmed the buy signal. So from the low that was made, big move up, but I need a lot more evidence to say that this is sustainable. Couple of questions. I had a question about CMCM. CMCM is, what is it? Cheetah Mobile, never heard of it. This is a leg B in the monthly chart, trading at 13.37, up 5 cents. But in the weekly chart, it's only a B. It's only a C, and it's come down a little too sharply below the 9. Both the 9 and the 200-period moving average were almost at the same level. In the weekly chart, the MACD is still good, but pulling back. Stochastic's not good at 59%. The daily is improving a little bit. And what I said is, I think there are some other better chart formations. I like this looking out, but it needs more work to me. It needs, I need to see that it's holding that base. The candle of last week is really ugly, a little too deep. That says to me, unless it can get from 1337 where it's at now into the, I'd rather pay up for this to know that it's going higher than to try to catch it on the way down. That's all. CMCM trading at 1337. Next question I had was, GE, I'm not even sure about keeping it in my Dow Quartet anymore. It's just horrible. Look, below the 9-period moving average, trading at 1463, down 19 cents. I just don't see anything just yet. Triple M is bouncing nicely. This to me looks like, I've got to take this very seriously. This daily peak F, weekly peak E, monthly leg D, possible peak D. And Triple M trading at 229.45, up 25 cents. This is not the kind of bounce you want. The bounce should be at 237 to 241. Then I'll say that's fantastic. Right now it's just a little bounce. UTX was the same thing. Let me check where it is now. Yeah, not even able to hold the bounce, down 230 at 125. This is going to be not good, not good. So I don't like the fact that my Dow Quartet, IBM is the other one, IBM. Yeah, same thing. Island reversal from a peak F back in the high around about the 21st of January, sliced to 145 from the 170. Saying this is not good. And I got this as a peak C in the weekly. I don't know. It's just not a great, but it's a retracement failure mode, so it doesn't have to go. That's not necessarily blue. That's a gray peak C. And monthly chart is just in a trading band. I have to tell you, the more I'm looking at this, the more I worked on it last night, the more I see. I think this is going to last a little while, this consolidation, as it rotates through the different sectors. Certainly the home builders, look at this, HGX, couldn't even rally. It's down 57 cents at 326, couldn't even get above the 9-period moving average. We've got to keep in mind that this is quite serious stuff that we're looking at. CVX was the better of the integrated oils. Now it's just failing. It cannot get out of its own way. ExxonMobil goes together with it. Same thing. Hey, this is a market. You've got to be careful. If you want to do trades, I'm calling it a trade for the upside. I'm quite prepared at any point to switch to the downside. I just want to see where it gets to. A good question here is has the S&P seen the high for the year? Is this like in 1994? Hey, that's a good question. Is the S&P high of the year in place? Is this like 1994 where the S&P hit the high and the Qs hit the high and rising T and X? There are a lot of similarities as I'm thinking about it, not so much in chart pattern. I wonder if I can go there. Let me see. Do I have it on this style chart? Let me just go to 1994. Yes, there we go. So here's 1994. You start off, you make a high in December or January. Oops, you can stop. You can stop. All right. There we go. So the high is, I think it's playing games with me. All right. The high is I've got a moving Dow. 3811.76. 38. That was the high in 4,002 in January of 1994, 3998, and then a slightly lower high, 2-bar reversal, peak D. Now let me open this up so that you can see what we're looking at. In a way, I'm thinking 1994, but I'm actually thinking other numbers, years. So let me just say the concept of what we're looking at, that high in January, and then it kind of starts to fail. This is similar to what I have as a mindset. I just haven't quite confirmed it yet. I remember being in the office of one of the Fidelity's chief mutual fund, person who ran one of the mutual funds. And it was I had said earlier in December or November that my target for the downside was somewhere around the 35, it's a long time ago, 3,500-ish area. So it went down to 35.20. Then I remember being in the office in March. Maybe it was February. Yeah, it was sometime. It was in March. And I said, I think this is a low. I'm not sure it's the low. I got a feeling it's going to retest that low. So I'm really not sure. I remember that distinctly saying it. I'll be back and I'll tell you the conclusion. Dow's down 141.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So someone in the den said, not like 1994, like 2000, no, 1994, excuse me, more like 1998. Well, he has 1998. Peak D in the monthly chart. The Dow goes from 9412 to 8786. So that is a 700-point decline. Of course, 700-point decline when you're at 9,412 is a pretty steep decline. It was 8%. And then you went on to the high of January of 2000 in the Dow, March of 2000 in the S&P, and the
you don't buy into that nonsense,
NDX.
do you? You know you can't time the markets.
And most importantly,
2006, you don't.
What we're looking at here is that there was a chop, 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 and that was the high, and it kept coming down. And then you had that really crash, certainly in the Qs, 88%, whatever it was, to the downside. But if I'm looking at the monthly chart, look, we held the 9-period moving average. That's a pretty decent consolidation. I wouldn't be surprised if we actually break that 9-period moving average at some point, but we are in this consolidation phase, and that's making upside action. Today should not be down 113 right now, 140 just a moment ago. Today should really have been down about 45 to 60 points maybe at the opening. I had a Chapman wave trend gauge flash to say that it should be a weak Dow opening. Of course, it was much weaker than weak. But then by now, between 12, let's say after 12 to just after 1 o'clock, there should have been a rebound to about a minus 20, maybe minus 40, preferably a minus 20. And then tomorrow we start to move higher. That's the way it should be. Now, I think because of the severity of the decline, because so many people are still not in, I don't think people were even buying this morning. This market, if there is a spike to the upside, Dow closes pretty nicely, down a little bit, but not a bad candle. Let me show you something that I was talking about here. So if you're looking at chart formations, just dragging this over, you see you've got a long way to go. 9-period moving average at 24,003. What is that? I should go to the real thing. There we go. Dow 24,787, and then the red one is the 20-period moving average at 25,154. But you've got this downtrend line to break out of. As soon as you break above it, then you're looking at the 20-period. So you really have to see the Dow within about 3 sessions, maybe by Monday, somewhere in the 25,280s or higher, and that'll be really good action. If it struggles, all we're doing here is using up a lot of energy, and you're going to be retesting the lows fairly soon. So that's what I'm looking at now. back to our story. We've got a couple of things we want to look at. IYT, which is the iShares Transportation Index. Looks to me like this is going to be a monthly peak E. Looks to me like this peak E in the weekly chart is already in place. I would hate to think that this is going to be a hat trick top in the transportation index. Little bounce here. It's at 185.36, down 18 cents. Comes off the 176 low. What's that? 8 points, not even 85, 9 points. Needs more than that. IYT needs to get to the 195.50, 196.30 area. Then I'm going to say, whoa, that is excellent action. So far, there's just a bounce. So you remember we were talking about the rectangle formations go from the top to the bottom. Look what happened. We just went from the top of the top of the trading range border towards the bottom of the border. Now we're in the middle. Just be careful. Chop, chop, chop. You think it's going to break out, you go long, wrong. You think it's going to break down, you go short, wrong. You're going to trade the outer borders until one of them is going to fail because it goes right through. That was the IYT. Next question was, the XAL. Yeah, this is going to be very interesting. XAL is kind of stuck. The pattern now in the weekly chart is not that good. Pattern in the monthly chart is holding above the 9-period moving average 112. The ARCA airline index at 114.16, down 3 cents. This is not good action. It should be doing much better. I didn't do crude oil. I forgot completely. Crude oil right now is down 18 cents at 59.11. Also made that peak F top. Now it's trying to find a base. Is this going to be a deeper correction? It's already giving a lot back in the monthly chart, and then it digests for a year and a half, 2 years. Then it goes to a B, and how long is it going to digest again? We'll see. So crude oil is really important. It needs to break above, it's at 59.10. It needs to break above 60, close above 61.70 in the weekly chart to show that it's got rebound strength. If it trades, if it actually trades, if it closes below, it's at 59.12. If it closes below 57.65 in the next 2 days, that's not good. I think crude oil is going to be going down quite a bit more. Next question. OIH. I haven't done the OIH for a little while. OIH is same sort of thing. Well, look at that big give back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back. And, we're back. Dow's not down on the 88th, and S&P's down 5. Had a little technical problem. Not sure if everything's coming through loud and clear. Yep, there it is. And let's just run this through before we run out of time. I'm going to give you the numbers that I'm looking at on the day. If there is a rally by about 15 minutes to 30 minutes past 1 o'clock, you need to see the Dow only down minus 40 or better. The S&P should be very close to -2 unchanged. If that occurs, then what we can expect is that tomorrow will be a critical day. As it is, Wednesday for me is going to be very critical, whether we're up there or not. Why? Because in the pattern that I'm looking at, the moving average convergence divergence, the MACD hasn't done anything yet. It's not looking very good at all. It needs to start to rally, and it needs to get to 24,790 to hit that 9-period moving average. So a very important period, and most what I'm watching, the icon that I'm looking at is also, I didn't even discuss the VIX index. The VIX right now is up 53 cents at 26.14. If the VIX starts to fall as the Dow gets and the S&P get a really strong late afternoon rally, that'll be very important. I'm not watching so much the bonds and everything, VIX, Dolly, and all that stuff. It's just how the volatility relates to a rally in the general market. If the VIX actually holds very well and even rallies a little bit as the general market rallies, then we've got to consider that the selling pressure is still rife. So I just wanted to get that out. And in the meantime, back at the ranch, what we are looking at in terms of the Dow, yesterday was a 3-in-1 day. It had a big move and a double of that move, and then it gave back about a third. So all in all, it was a very strong day, but it didn't finish very well. And today's kind of a wishy-washy day. It should have had a lot more strength in different sectors. are showing some weakness. I would have much preferred at least one of the sectors, like the NASDAQ, is a little bit better than the S&P and the Dow. But if that can, I'd actually like the QQQs to lead us up in the next 2 days. So I'm waiting for the music to come on. Not sure what's going on. Stay tuned for our great programming. Check out my opening call. And if everything works out, I hope to be on with Tom O'Brien later today. And, there's Steve Rhodes. He's there. Aloha from Lana. Lana? Oh, well, he's over there, 6,000 miles away from me. And Lanai. Okay, very good. Looking forward to your show, Steve. And I'm not sure when I'm signing off because I can't hear the music. But most important is how does the Dow act this afternoon, and the S&P and the Qs. We don't want to see a big sell-off. That'll be a big negative. And here I am waiting for the other music. Thank you for being here. A lot to do in the sudden pickup of the cell phone. Have a great day. Hope to be back a little later with
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.